Question 3 dealt with capital gains tax and an estate that needed to be distributed for the deceased Barry Smith. All right, if we look at the question, you can see the marks allocated are 21, and roughly about half an hour is the time you should be spending on this question. Really, no more than that. Okay, so stick to the time limit. We always start with the required part so that you know what is required of you, obviously. Okay, there's an A, B, and a C part to this question. A deals with the distribution of the estate. All right, so at this point, I would start highlighting a couple of things, making a couple of notes on your question paper. You shouldn't walk out of an exam with a nice, neat exam paper. All right, you need to scribble and make notes on this question as you feel. So the information up here needs to literally get onto this piece of paper. So for those of you that have studied, hopefully there's some stuff up here that needs to get transferred. All right. So if we look at question 3 now, part A's required part, it says you need to indicate how Barry's estate will be distributed. Indicate the amount that each of Barry's survivors mentioned in the question will get. Okay, so we need to address each of Barry's survivors. And don't forget, it says here we need to give reasons why each of those survivors will get the amount that they will get. All right. Part B was just the capital gains tax part of the question. We had to do the CGT calc for the deceased. Okay, very important there. Always make sure you know who the CGT calc is for. Is it for the deceased or is it for the deceased estate? In part B, again, we're asking for reasons why certain assets would not attract capital gains tax. All right, so that's also very important. Provide reasons. At this point, just for yourself, though, that you remember and don't forget, things like the annual exclusion for the deceased, okay, would be, how much would it be? It would be 300,000 Rand in the year of death for the deceased. Okay, so just make a couple of notes for yourself here so that you don't forget these easy things. The CGT rate currently is 33.3%. Okay, that is not 33.333. It's 33.3, all right? Part C required you to do the CGT calc of the deceased estate. Okay, and again, give reasons why certain assets would not attract CGT. So things like personal use assets, if there were some rollover provisions, assets being left to a spouse and things like that. Those are the kind of reasons we're looking for. So you need to write those reasons down. Again, just make a little note for yourself. The annual exclusion for the deceased estate is 30,000 Rand. Okay. All right, so we've gone through the required part. We know what to look out for. So let's start reading the question now. Okay, Barry Smith is our deceased in question. He is survived by his father, Johan, his wife, Bets, to whom he was married in community of property. Okay, so immediately that should tell you that half of the estate belongs to Barry and half of the estate belongs to his wife. Okay, that is critical in how we are going to distribute the estate of Barry. Sorry, I've just written here half belongs to wife. Okay. Carl, who was adopted by Barry and Bets. Okay, so that's their son. And an adopted child is treated exactly like a biological child. So there's no difference there. Carl would be an heir of Barry's. Dani, a child of Bets, born out of wedlock. Okay, now a child of Bets, Dani isn't a child of Barry's, all right, so he's not a blood relative of Barry's, so he doesn't stand to inherit from Barry in this case. Okay, so just make a note of that Dani is not a blood relative, should that become relevant as we read further. All right, the net joint estate of Barry and Bets amounted to 3,998 million. And then it consisted of the following assets, and it goes on to list all the assets. So if you had to add up all these figures, you would get to the 3.9 million. All right, so we've got a primary residence, a motor vehicle, listed shares, holiday cottage, and some cash. All right. Barry and Bets had separate wills, okay, and in Barry's will, he bequeaths 100,000 Rand out of his portion of the estate to Betts, and the residue to Johanna Smith, his mother. Okay. But now his mother died 5 years ago. So what has happened there? This makes part of Barry's will invalid. Okay, this obviously is a condition that cannot be fulfilled. All right, so part of Barry's estate needs to be distributed now in terms of intestate succession. Okay, so remember, there's a joint estate. Half belongs to Betts, half belongs to Barry. It's the half that the half that we're dealing with is Barry's half. So out of that half, in terms of the will, 100,000 goes to Betts. So that condition of the will can be fulfilled. And the residue now, which would have gone to his mother, but now she passed away 5 years ago, that needs to be dealt with in terms of intestate. Okay, and then the intestate rules will apply. Betts bequeathed everything to her son Dani in her will. Okay, that's irrelevant at this point because we're not dealing with anything of Betts's right now. Then further on, the executor sold all the assets to third parties except for the residence, which was taken over by Betts as part of her portion of the estate. Okay, so this info is for CGT. Okay, when the executor comes along, he sells all the assets except the residence. So that will affect our CGT part of the question. Okay, so I think that's all the info that has been read. We can now start doing the question. Okay, part A is where we're going to do the distribution of the estate for Barry. Okay, now remember the required asked us to deal with each of his survivors in the question and provide reasons. All right, so the first survivor we had was Johann. Okay, does Johann inherit anything? No, he's not an heir of Barry's, all right, and he's not mentioned in the will. So Johann gets nothing, all right. So there, straight away you can say nil, but remember we're looking for reasons. So either you say he's not an heir, okay, or rather you must mention both, not an heir and not mentioned in the will, all right. The next survivor of Barry's is Betts. Okay. First things first, we know that half of their estate will go to Betts. All right. So what was the total estate amount? It was that 3.998 amount. Half will go to Betts. Right. And that's because of their marriage dispensation. Okay, that amount is the 1.999 million. All right. Then, in terms of the will, she's entitled to get 100,000 Rand cash from Barry's portion. Okay, so that's in terms of the will. So she gets 100,000 cash. All right. Now, does she get anything of the residue? Okay, remember there's a residue amount of Barry's half. She needs to get a child's share of that amount. All right. Remember, a child's share will be the number of stirrups plus 1. Okay, so in this instance, there is only one child, which is Carl, and plus 1, which is her portion. So it's dividing by 2. Okay, so the residue amount, first of all, would be Barry's half, which is the 1999. Minus the 100,000 Rand cash that he pays out of, that comes out of his half. We're left with 1899. All right, and that is then divided by 2, the number of stirps. Okay, so that figure is the child's share that Betts will receive of 949,500. Okay, so in total, Betts receives just over 3 million. She receives half in terms of the marriage dispensation, 100,000 Rand cash, and the child's share of 949. The next survivor is Carl, the son, all right? Now he will receive a child's share, which has already been calculated above as 949,500, all right? So who else must we deal with in the question? Just quickly read the question again. We've dealt with Johann, we've dealt with Betts, we've dealt with Carl. We need to now deal with Dani. He's the last survivor of this whole situation. Does Dani stand to inherit anything? No. Remember, he's not a blood relative of Barry's. Okay, he's not a competent heir, so he doesn't stand to inherit anything of this residue amount. So you can just simply say Dani, not a blood relative, and he gets nil. All right, so if you had to add up basically these two figures, that is going to get you back to the 3,998,123. There we go. Okay, which was the total amount that was available for distribution. All right. Let's do part B. I think I'm actually going to do part B on another page. All right. Let's read. Part B was where we have to calculate the taxable capital gain for Barry, and we have to give reasons. All right, so now in the question, we were provided with a list of assets, if you remember. Okay, so we need to deal with each asset when we do our CGT calcs. Remember, with capital gains tax, you have to work out a gain or a loss for each asset. Okay, add up all the gains and losses, get an aggregate amount, and from there on, you can take the annual exclusion off, and then multiply by the CGT rate. So let's look at our list of assets. Right, primary residence. At this stage, alarm bells should be going off. What do we know about primary residence? Okay, there's a couple of things. There's an annual, not an annual exclusion, it's a rollover provision of the amount of 2 million rand. So if you make a gain on the disposal of a primary residence, the first 2 million rand gain will be excluded from CGT. Okay, so that possibly could happen. But what do we know about the primary residence? In the question, the primary residence was left to Bets. So another reason here why this primary residence will not attract CGT is because it's being left to the spouse. Okay. Motor vehicle, what do we know about motor vehicle? It's a personal use asset. So straight away, just write for yourself here, personal use. Okay, and that's the reason you need to write down. Listed shares, is there anything special about listed shares? Maybe an exclusion or anything? No. So here we're going to have to do a full CGT calc. Also for the holiday cottage, on cash, CGT, there's no CGT on cash, all right. So there, straight away, we don't have to even think about dealing with the cash part. Okay, no CGT there. Okay, so part B. All right, now the answer to this question dealt with columns going this way. It's really entirely up to you how you want to lay out the answer. I'm going to stick to how it is done in the solution. All right, so my page is going to look a little bit crammed, but you've obviously got the solution in front of you. All right. Okay, so we said the first asset is the primary residence. Okay, I'm just going to quickly write in the columns here. I'm going to say proceeds, base cost. Again, any exclusions, and then the final gain or loss amount. All right, the primary residence, the solution does give two reasons. Okay, so it says left to the spouse. The other reason that was, which I didn't mention, is if a primary residence is sold for less than 2 million rand, in other words, the proceeds are less than 2 million rand, then you don't even have to worry about CGT. There is going to be no CGT amount that's payable, right? Which was the case in this instance. Because if you look at the market value on the date of death, it was 1.9 million. So it's less than 2 million rand. All right, so that could have also been another reason. So you can say a less than 2 million. All right. Left to spouse, less than 2 million rand. If you'd gone, if you hadn't put these steps down, these reasons down, and you had worked out a gain or a loss, you would see that the gain was actually less than 2 million rand. All right. So that then you would have used the rollover, the primary residence exclusion as your reason. All right, the second asset was motor vehicle. We've already dealt with that. We know there will be no CGT. The reason is personal use asset. Okay, so remember you must write down your reasons, otherwise you're not going to be getting your marks. The third asset was listed shares. Okay, here we need to work out a gain or a loss. All right, the market value on the date of death was 195 and the base cost was 220. So here you can see there's actually been a loss on the disposal of these shares. Now, what I should have probably mentioned a little bit sooner is that, remember, on the date of death, Barry is deemed to have disposed of his assets. Okay, so he didn't really sell these assets, so there isn't really a selling price that you can use. What you must use is the market value of those assets on the date of death. All right, so the market value on the date of death for the shares was 195 less the 220 base cost, all right, and that gives us a loss of 25,000 Rand. Okay, what is a critical thing that I have forgotten here? All right, remember, they were married in community of property. All right, so these figures over here, half of these assets belong to Bets. All right, so the figures we should be working with is half of these values. Okay, so what you must indicate, either you're going to use these full figures and divide the loss by 2, which gives you 12,500 as the loss, all right, or you can divide the figures by 2 here. Okay, so either way, there is one principal mark for knowing that half of these assets belong to Bets. Okay, so only half of the value can be used. Okay, the holiday cottage was the next asset. Okay, we need to work this out. The market value on the date of death was 1.5 million. The base cost was 825. Again, these figures need to be divided by 2. Okay, so the loss here was, not the loss, sorry, the gain was 337,500. And just rolling over into the final column, 337,500. Okay, and the last asset was cash, and we know we don't deal with cash. Okay, and cash is not an asset for CGT purposes. All right, just to make sure, have we dealt with all the assets? We've dealt with the residence, the motor vehicle, the listed shares, the holiday cottage, and the cash. Yes. All right, so we can move on now. We can add up all our gains and losses and get an aggregate figure. All right, the aggregate amount was 325. Okay, what do we do after this? Remember the annual exclusion. Okay, we can take that off now. Remember, the amount was 300,000. Okay, that gives us another subtotal of 25,000 Rand. Okay, do we stop there? No, we don't. We need to go right to the end. We need to work out what is the taxable capital gain. So we need to multiply this figure now by the CGT rate, which is 33.3%. That's going to give us an amount of 8,325. All right, and that's the capital gains tax figure. All right, that was part B. Now we need to do part C. Part C dealt with the CGT for the estate. Okay, so anything that gets sold out of the estate by the executor is where there's going to be some CGT. All right, and we know that the executor sold all the assets. Okay, so he sold all of these assets to third parties except for the residence. Okay, you can see there that's not applicable. The motor vehicle is also not going to be applicable because that's still a personal use asset. There is no CGT there. So we are going to do 2 little CGT calcs, or rather work out a gain or a loss on these 2 assets over here, the listed shares and the holiday cottage. Right, just on a clean page. Okay, the last part of the question, part C. I'm just going to write here the estate. When answering a question, just make sure you've got the right heading so that we can tell the difference between is it a CGT calc for the estate or the deceased, because sometimes students actually don't know the difference, and we also don't know which calc we are marking. All right, so you just literally have to say the estate, and we'll know what calc it is. All right, so the CGT calc for the estate, the first asset we need to deal with is the listed shares. Okay, again, just some columns here: proceeds, base cost, gain, any exclusions, and the final amount. All right, the listed shares. Okay, we need to have a selling price. The selling price would be then the amount that the executor got when he sold these shares. Okay, and that is 190. That's provided from the table. Okay. The base cost will be the market value of those shares on the date of death, of Barry's death, which was 195. Okay, again, we've made a bit of a loss here of 5,000 Rand. There's no exclusion, and the 5,000 Rand gets carried over into the last column. All right, again, what did I forget? They're married in community of property. So can you see that it's such a simple thing that you can forget, but it can have quite a consequence on your answer. All right. So again, just divide by 2 there, the principle of knowing that half of the values belong to the spouse. So the amount will be 2,500 Rand. And then the holiday cottage, the selling price was 1,550. And the base cost again would be the market value on the date of death, which was 1.5 million. And that gives you a gain, if you divide by 2, these two figures, that gives you a gain of 25,000 Rand. Okay, sorry, I've gone over onto that column, so let's just put it over there. All right. If we add up the total gain and loss there of those two, that's going to give you a figure of 22,500. Okay, so that's our aggregate. At this point, we can take off the annual exclusion. And we know for the estate, it is 30,000 Rand. So don't get confused between the different amounts. Having said that, these figures are provided to you in annexures at the back of the exam. So should you now get confused and think, oh my word, what is the amount? I can't remember. Quickly have a look at the back of the exam paper. It is listed there in the annexures. All right, so you can actually see this is going into a bit of a loss situation, which of 7,500 Rand. So obviously then there's no CGT amount. All right, so I hope that's helped you deal with certain concepts of CGT and some interstate succession rules. All right, and I hope you did it within half an hour.